This lesson is part of the GRESB assessment training program. It will cover how to complete the asset assessment management component using the GRESB assessment portal. We will introduce the asset assessment management component and describe its aspects and their scoring weightings. For an introduction to the overall infrastructure asset assessment, refer to the lesson titled Asset Assessment Structure. Next, we'll go through indicators aspect by aspect, providing guidance and examples of how to report on each indicator in the assessment portal. We will also explain how materiality-based scoring applies to the management component. By the end of this lesson, you should be able to complete the management component of the infrastructure asset assessment. After this lesson, we recommend that you follow the lesson on the asset assessment performance component. Introduction, aspects, and weightings. As a reminder, the GRESB infrastructure asset assessment consists of a management component and a performance component. This lesson focuses on the management component, which looks at management and processes and is pitched at the organizational level. The management component consists of 5 aspects: leadership, policies, reporting, risk management, and stakeholder engagement. It is composed of 21 indicators, here represented by the green circles, 18 of which are scored indicators. Viewed in terms of scoring weightings, the management component makes up 50% of the overall infrastructure asset assessment score, with the weightings of each aspect shown here. The risk management aspect, at 19.7%, has the highest aspect weighting, followed by leadership at 12.5%. The first aspect of the management component is leadership. This aspect evaluates how the entity integrates ESG into its overall business strategy. The first indicator of this aspect is on entity materiality assessment. A materiality assessment is an exercise widely used to inform sustainability reporting and communication strategies. Please note that this indicator is quite distinct from the GRESB materiality assessment indicator RC7 in the reporting characteristics. That indicator provides a standardized materiality assessment used for materiality-based scoring in the assessment. More on this later. Whereas this indicator assesses whether the entity undertook its own materiality assessment. The question for this indicator asks, has the entity undertaken a materiality assessment in the last 3 years? As for all indicators, you then have the option of selecting yes or no. When selecting yes, 2 nested elements appear. The first covering identification of material ESG issues for the entity's operations, and the second about engagement with relevant stakeholders to identify the material issues. You need to select whether your materiality assessment included one or both of these elements. Half of the points for this indicator are allocated for each element. If it did not address either of these elements, then select no. This indicator is worth up to 1.8 points. No evidence is required for this indicator. It is not validated, meaning there is no check on the input provided. If the entity participated last year, the indicator will pre-fill with last year's answer. In these cases, review the response and/or evidence carefully because circumstances may have changed. As for all indicators, a context box is provided at the end of each indicator should the entity wish to provide more context to investors or fund managers reviewing the entity's report. This is optional and for reporting purposes only. The second indicator of the leadership aspect addresses ESG leadership commitments. This indicator assesses the entity's commitment to ESG leadership standards or principles. If the entity has made a public commitment to ESG leadership standards and principles, then select yes, and nested elements will appear. If it has not, select no. The various commitments are divided based on their nature. That is, whether they are general ESG commitments like the UN Global Compact or specific to an environmental, social, or governance issue like the Science-Based Targets Initiative. They are also divided based on whether making the commitment obliges action or not. Unlike the previous indicator, this indicator is not scored and is for reporting purposes only. The next indicator is on ESG objectives and asks the question, does the entity have specific ESG objectives? Clear environmental, social, and governance or ESG objectives help participants address material issues and integrate them into overall day-to-day management practices. If the entity has ESG objectives, then select the scope of these objectives. Are they somewhat general, or are there specific environmental, social, and governance objectives? Note that more points are gained for specific objectives. Objectives should be actionable and have been formally adopted. For this indicator, you are required to provide evidence to support your answer. This evidence may be publicly available, in which case provide a hyperlink, or not publicly available, in which case upload a document. More points are gained for publicly available objectives. This indicator is subject to manual validation, meaning that the evidence that you provide is reviewed by our third-party validation provider. For more information on validation, please refer to the validation lesson. Having personnel dedicated to ESG issues increases the likelihood that the entity's ESG objectives will be properly managed and targets will be met. So the next indicator addresses whether there is an individual responsible for ESG. Select the type of role assigned the main responsibility for ESG for the entity. Is it a dedicated employee with ESG as their core responsibility? An employee where ESG is amongst their responsibilities? An external consultant? Or someone from a partner organization? Most points are gained for the first option, with a consultant gaining the least points. Provide the full name and job title of the individual responsible for ESG. This indicator is subject to automatic validation via checking that the name and job title are completed and does not require evidence. The next indicator on a senior decision maker for ESG follows a similar structure, so we won't discuss this indicator in the lesson. The last indicator in the leadership aspect asks, does the entity include ESG factors in the annual performance targets of personnel? This indicator intends to identify whether and to what extent ESG issues are addressed in personnel performance targets. Incentives like performance targets have been shown to increase the entity's capacity to improve ESG performance. The indicator is looking for targets to be in place and that they have real consequences, either financial or non-financial. It also looks for whom the targets and consequences apply. More points are gained where the consequences are financial. This indicator is subject to manual validation, and validators will need to confirm that targets exist, there are consequences, and that these apply to the personnel identified. The second aspect of the management component is policies. This aspect evaluates the steps undertaken to stay abreast of material ESG-related risks. There are 3 indicators in this aspect, all very similar. The first covers environmental policies. Unlike the indicators we have seen so far, this one applies materiality-based scoring. Materiality-based scoring means that only the issues that are material to the entity need be addressed. Which issues are material is determined by the GRESB Materiality Assessment Indicator, which is part of the assessment reporting characteristics. It is therefore important that the reporting characteristics are completed prior to starting the management component. See Asset Assessment Structure and Materiality Tool lessons. Materiality-based scoring means that only issues deemed of medium and high relevance count towards the score for this indicator. Issues of low or no relevance will not contribute to the score. The materiality or relevance for each issue will be shown as a table under RC7's GRESB Materiality Assessment. Select all of the environmental issues for which the entity has a policy. This needs to be supported by evidence. In scoring, issues of high relevance are allocated double the weight of issues of medium relevance. To achieve full points, policies need to cover all of the material environmental issues. The other 2 indicators in this aspect apply the same approach but cover social and governance issues respectively. The third aspect of the management component is reporting. The intent of this aspect is to assess the entity's approach to ESG reporting and disclosure. Let's have a look at the indicator on ESG reporting. This indicator asks, Does the entity disclose its ESG actions and/or performance? If yes is selected, a number of different disclosure methods or reporting types appear in the selection list. Participants can upload everything from an ESG section in their annual report to a separately issued sustainability report to an integrated report which is aligned with the International Integrated Reporting Council framework. Note that while participants can select multiple options, the same uploaded document cannot be used to support more than one answer option. For example, the evidence to support section and annual report cannot also be provided for the standalone sustainability report. Let's now look at an example of selecting section and annual report. When this option is selected, a number of additional fields appear. Select the fields that relate specifically to that disclosure method and be sure they are corroborated by the uploaded evidence. So first, you will need to select the applicable reporting level of the disclosure method. If the scope of the reporting in the annual report discloses actions or performance that are in direct reference to or match the reporting entity can be selected. For example, an annual report that is solely applicable to the entity or which includes specific and detailed actions or performance of the entity in addition to other entities within the group of companies. Note that if the entity subject to that particular GRESB submission is in itself a group of entities, participants may select entity in this section. An example would be a listed company composed of multiple fully owned subsidiaries. So if the GRESB submission is done at the consolidated level and the annual report covers the entire group of entities, you can conclude that the report is applicable to the entity reporting to GRESB, and then entity can be selected for this disclosure method. Groups should be selected if the scope of the reporting in the annual report includes the entity subject to the GRESB submission, but, for example, does not have specific and detailed actions or performance of the entity itself, but rather only for the larger group of companies as an aggregate. Next, you can select whether the section and annual report is aligned with a relevant reporting standard or guideline, such as GRI or PRI. The report must clearly and directly reference the reporting standard selected. If the report is not aligned, simply leave the selection on the text "Choose one." Lastly, you can select if the disclosure is third-party reviewed. If it is, you will select whether it was checked, verified, or assured. If the report is verified or assured, select the applicable standard from the drop-down menu. The formal assurance or verification statement must corroborate the scheme that is selected. It can be included within the report or provided as a separate evidence upload. Reporting year is one of the most important elements of RP1 and varies depending on the disclosure method selected. Section and annual report must refer to actions and/or performance from the reporting year. For an entity reporting on calendar year 2019, the annual report must cover the year January through December 2019. Disclosures published in 2020 referencing 2019 actions and/or performance are also valid. An annual report relating to calendar year 2018 is not valid unless you explicitly note that the 2019 annual report has not been published yet. This can be done using the GRESB evidence cover page or the evidence open text box. The standalone sustainability report must reference actions and/or performance from the reporting year or the year prior. Consequently, disclosure referencing 2019 or 2018 is valid for a company reporting on calendar year. An integrated report must reference actions and/or performance from 2019, 2018, or 2017 for a company reporting on calendar year. Dedicated section on corporate website, as well as the disclosure methods, section and entity reporting to investors and other, must reference 2019. All of the required elements of the evidence uploads and different disclosure methods are explained in detail in the Infrastructure Asset Reference Guide. We highly recommend familiarizing yourself with the requirements prior to completing this indicator and keeping the reference guide at hand while reporting. The next indicator covers incident reporting. Specifically, does the entity have a process to monitor and communicate about ESG-related controversies misconduct, penalties, incidents, accidents, or breaches against the codes of conduct or ethics. Select the stakeholders that the process requires communication with and describe the communication process. This indicator is automatically validated based on the stakeholders selected. Communicating with more stakeholders secures more points subject to a diminishing increase in scoring. See the validation and scoring lesson for more details. The description of the communication process is not scored. The next indicator follows the last by asking to report on actual incident occurrences, the intent being to ensure the communication of significant incidents to the entity's investors. If one or more incidents have occurred during the reporting year, enter the total number of incident cases, the value of any fines and/or penalties, and the total number of currently pending investigations. This indicator is not scored, but is of significant interest to investors. GRESB may use the information in this indicator as criteria for the recognition of sector leaders. The fourth aspect of the management component is risk management. The intent of this aspect is to assess the entity's understanding and mitigation of material ESG risks and opportunities. This indicator assesses the entity's use of management systems to manage environmental impacts, risks, and opportunities. The presence and application of an ESG-related management standard or comparable framework is an indicator of an entity's commitment to effectively action ESG issues. Select the applicable elements and provide supporting evidence. This indicator is subject to manual validation. For accreditation, evidence must include signed proof of the certification according to the standard. Points are gained for each management standard applied, with accreditation worth twice as much as alignment. The next three indicators cover risk assessment in turn for environmental, social, and governance risks. Let's look at the indicator for social risk assessment. As with policies earlier, these indicators apply materiality-based scoring, so only the issues that are material to the entity need be addressed. As a reminder, the material issues are determined by the GRESB Materiality Assessment Indicator, which is part of assessment reporting characteristics. See Asset Assessment Structure and Materiality Tool lessons. First, select the elements of the risk assessment process undertaken by the entity. This section is worth 40% of the indicator points. Next, select all of the social issues which the entity has addressed in a risk assessment. This needs to be supported by evidence. Materiality-based scoring means that only issues deemed of medium or high relevance count towards the score. Issues of low or no relevance, if selected, will not contribute. The materiality relevance for each issue will be shown. This section is worth 60% of the indicator points. Issues of high relevance are allocated double the weight of issues of medium relevance. To achieve full points, risk assessments need to cover all of the material social issues. The other two indicators on risk assessment apply the same approach but cover environmental and governance issues. The next three indicators cover monitoring of environmental, social, and governance issues. We'll use the indicator on monitoring of governance performance as an example. The intent of this indicator is to assess the entity's use of a systematic process to collect data to monitor and assess governance performance. Like the indicators on policies and risk assessments, these indicators apply materiality-based scoring. Select all of the governance issues which the entity monitors. Again, materiality-based scoring means that only issues deemed of medium and high relevance count towards the score. To achieve full points, monitoring needs to cover all of the material governance issues. These indicators are automatically validated and evidence is not required. The final aspect of the management component is stakeholder engagement. Improving the sustainability performance of infrastructure assets requires dedicated resources, a commitment from senior management, and tools for measurement or management of resource consumption. It also requires the cooperation of other stakeholders, including employees and suppliers. This aspect identifies actions taken to engage with those stakeholders, as well as the nature of the engagement. The intent of the first indicator in this aspect is to assess the existence, scope, and reach of the entity's stakeholder engagement program. The first section covers the key elements of such a program. Select all which apply. This section is worth 60% of the indicator. Note whether the program aligns with third-party standards using the drop-down option. This is worth 20%. The third section covers which stakeholders the program applies to. Again, select all the applicable stakeholders. This section is worth a further 20% of the indicator. This indicator is subject to automatic validation. The next stakeholder indicator covers supply chain engagement and has a similar structure to the last, but focuses on supply chain engagement and procurement processes. An entity's procurement decisions and activities can lead to significant negative sustainability impacts in the supply chain, so grievance mechanisms play an important role to provide access to remedy and reflect an entity's commitment to ESG management. The next indicator assesses whether there is a formal process for stakeholders to communicate grievances that apply to the entity. Similar to the previous two indicators, the first section covers the key characteristics of the grievance process. Select all which are applicable. The second section covers the stakeholders that the process applies to. Again, select the applicable stakeholders. Each section is allotted half the indicator point weighting. The final indicator in the stakeholder engagement aspect is on reporting of stakeholder grievances and how they have been resolved. Although this is not scored in the assessment, this is of significant interest to investors. Enter the number of grievances received. 0 may be entered, but only if there is a formal grievance mechanism in place, as per the previous indicator, and no grievances have been received during the reporting year. Provide a summary of the grievances and a summary of how they were resolved, if applicable. Thank you for taking the time to complete this lesson. We hope that it helped you get a better understanding of the GRESB infrastructure asset assessment and prepared you to complete the assessment accurately. For any questions, you can contact us at gresb.com/contact.